Hey, 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 what's shaking bacon? It is time for, I don't know if I can call this lending lessons because we completed that whole like 16-week or whatever that was course. If you are watching me, this is Renee Forsythe. You're watching Colorful Colorado Real Estate on YouTube. I promise not to talk with my hands all day today. But I have two of my preferred lenders with me today, Nick and Mike. They'll introduce themselves. There's been a lot of stuff in the news. As we jump off, guys, I can't not say this. It's going to date the video, but my K-State Wildcats got left out of the tournament, and I'm not happy about it. I mean, they did not perform at a very high level this year, but they would have in tournament. Anyway.
Well, I'm not happy that my CSU Rams have to play tonight in the play-in game, but
yeah.
At least we're in. At least we're in.
Winning, you're in.
Winning, you're in. That's it.
Thanks for rubbing that in. I appreciate that.
You're welcome. Yeah.
No, but our women's team is good enough, but we're hosting. So,
how about that?
Yay.
Oh,
let's
cool.
go women.
Yeah, that's cool.
And nice. I really feel like this year there's been a lot more news around women's teams than the men's teams.
Yeah.
Beyond time. But anyway, okay. So if you're watching this, you did not want the NCAA. This is not what we get paid for. We are not sportscasters as much as we look like we would be amazing sportscasters. Today we're going to talk about a couple of things, and what we're seeing right now in the Denver market is a challenge when it comes to affordability. And when you're worried about affordability, that affects your timing. And when you're worried about those two things, fear comes up. And so then there's fear around just about everything. What if something happens with my car? What if something happens with my house or with my rent? What if something happens with, when we buy the house and something goes wrong? So I always talk to my clients, and we have that conversation around functioning in either fear or faith, and having the faith to trust the trusted professionals around them. And I surround myself with some great people. So Nick and Mike are here today. We're going to hit financing, the Fed's crystal ball, and just how cloudy it must be for them, because it is for us. And then we're going to wrap up with a couple of things. So who wants to start?
Yeah, I'll introduce myself. Nick Maccrone, Oxford Mortgage, owner of Oxford Mortgage. I know people that have watched before have seen Mike and I on these videos, but been with Oxford Mortgage since 2004. Company I've ever been with. Whoa.
Are you back? You're back.
Threw me out there for a second. Didn't like what I had to say.
My screen just did something, and I
think it was Mike. I think Mike found a way to kick me off.
No, keep going. Sorry.
But yeah, so Nick Maccrone, Oxford Mortgage. Yep.
Awesome.
I'm Mike Oswald, New American Funding. And I have been in the industry for 20 plus years in Denver. And I've been with New American Funding for about 7 years. And I'm happy to be here as always.
Awesome. All right, guys. We kind of had the rundown. Who wants to jump in first? Well, Nick started. So, Mike, you jump in on the questions first. I saw you taking notes when we were talking.
I always do. So you want to kick it off? The topic, or you want me to we're going to talk about the Feds?
Yep, we're going to talk about the Feds.
Everybody's favorite 4-letter word, Feds, right? And everybody has a 4-letter word, baby, for the Fed. But it's been really talked about for several years now, since the rates started going up in the beginning of 2022. And the Feds have done what they've said they would do, and they skyrocketed rates in 22 and 23. And then starting, kind of end of last year, beginning of this year, we've started to see them come down. And the goal for the Feds, they've come out and said that they are going to raise or lower interest rates intentionally in 2024, based on the economic news or numbers that they are starting to see with the inflationary numbers, which is what they've been monitoring. And that was the whole reason for them raising rates, is to combat inflation, raise the cost of money, and it decreases the inflationary pricing on consumer goods, essentially. That in a nutshell.
I love it.
Yeah.
Economics professor Mike. I need to change.
That's all I've got. So I just right there now, but and so that's the projection. And so crystal ball, you said, break out our crystal balls. We're just going off of economic news and the announcement. What's interesting and positive about it is that not only is it NAR and Fannie Mae and Mortgage Banking Association and different industry experts, as it were, right? Lending, real estate, whatever. It is the Feds coming out and saying, we are going to intentionally lower rates. It's time. So the good news is it's going to happen. It's not bad news. We just don't know exactly how it's going to lay out going into the remainder of 2024 and then into 2025. But they've got about, what is it, Nick? About 5 rate decreases that they've got on the books for the next, I'd say 12 months is probably maybe the rest.
Exactly what I was going to say. That's exactly what I was going to say. Yeah. And listen, I mean, it's the indicators all tell us all that rates are coming down. It's not just the Feds talking. I mean, you can look at the inflation readings yourself and see that they've come down from 9% to whatever it's at now, 3 something, 4 something. But the goal of the Feds is 2. It's just kind of this arbitrary 2 that they throw out there, 2%. But I think it's going to be a little slower played than it already is a little slower played than we hope, because I was saying May 10th, 2022 for a long time. So it's been a little slower than I think we'd all like. But, regardless of our thoughts that we have about the Fed, their job is difficult, right? There's a lot of moving parts with our economy, jobs reports and unemployment reports and inflation readings and stuff. So they're trying to make sure they don't overdo it. But to Mike's point, they are starting to indicate that this higher for longer policy is a little outdated now, and they're not far from being comfortable cutting rates. So that's a good thing. So
y'all remember way back 4 years ago when COVID hit and all the different industries basically shut down except for real estate.
Yeah.
And we kind of kept them afloat. And I just want to point that out. The Feds seem to have forgotten. So I was just double checking that you guys were right there.
Yeah.
You remember the same thing I remembered.
Yeah.
Okay. So when you're looking at economics and you're looking at interest rates, the reason we've covered this before, but if you're new to watching us and what are we, the Three Stooges? Maybe I should rename this the Three Stooges.
Let's be the Three Amigos instead.
Yeah, we can come up with a better name than that.
Let's be better, okay?
Okay. You work on that. Is the reason we care about interest rates, and the only reason we care about it, well, there's 2 reasons, is because the news keeps harping on it. And so it's what our clients hear. And that's what's driving their questions, I think, a lot. And when it comes to interest rates, what it does, when you boil it down, is that it affects the affordability. When we joke about marry the house, date the rate, that's, it's not really a joke if you can't afford the rate that you're at, if that rate puts you over your monthly budget. So I know, and I would imagine if not every realtor is probably like me, but there's more than one who sends their clients to you, and you guys run the numbers before we ever go out and see the house. Man, you guys must be really, really busy running numbers. I want to know, how busy are you with loan applications? Because that's a lead measure, and there's not very many of them in our industry. So, Nick, are you seeing an uptick?
Yeah, no. We're doing well on apps. I mean, relatively speaking. I mean, activity's picking up. We're also seeing, believe it or not, some cash out refinance applications, which is it's a welcome change. I mean, it's listen, there's not a whole lot of rate and term refinances going on right now. I don't want to speak for Mike. I don't have a ton of rate and term refinances going on right now, but the American consumer is strapped. I mean, make no mistake, it's a little misleading when you see these reports and you hear the Fed, Jerome Powell say, the American consumer is resilient and strong. No, they just have room on their credit card still, right? And now exactly. So that's starting to come to an end. They're running out of limit. So we're starting to see a little bit more of that, but definitely our purchase activity is starting to pick up. And I think part of it is that there's a lot of wait fatigue, right? Like I'm tired of waiting, right? There's just this thought of
double hand. Yes.
Yeah. We were going to wait for rates to come down and they
demand.
haven't yet. And I think people are just kind of coming to grips with the fact that, I said this in a meeting the other day, and this is not me being flippant about having an affordability issue in our market. Okay. So I understand that. I don't mean to be dismissive about it, but we really don't have a rate problem.
No.
Right. I mean, historically rates are very good. I mean, they're kind of right at the average of what they are. I think we're all a little spoiled from the years leading up to now. But rates aren't horrible, right? So they're definitely going to improve, but they're not horrible. I mean, they're kind of hovering where they at that 30-year, 20-year average. So yeah.
Yeah, that's the part that gets me, when you can lock in an FHA at 5.99 or 5.95, and that's just under 6. If I learned math the way everyone else learned math, which has changed in the last couple of years. But 6 is the average. And so the delusionary rates of 2020, 2021, we're all coming out of that coma. I don't know how the fence, I'm going to try to put as many analogies into one sentence as possible. I don't know how that fence hasn't given in, because we have so many people just on the fence waiting.
Yeah. That fence is pretty big.
Yeah. Right. So what are you seeing, Mike, when it comes to loan applications, things like that?
I'm seeing an increase as well. I can't speak for the cash outs yet. I've had one recently, but other than that, I think we are seeing some pent up demand with clients, buyers getting off that fence, saying, you know what, I've kind of waited long enough. I want to buy. And I think it goes to the point of, we are a little bit jaded from, or not jaded, we're spoiled from the low rates that we had for a couple of years. Obviously that drove huge demand, huge appreciation, the market shift, and then everything kind of came to a pretty abrupt halt and slowed down quite a bit. And then, people are just kind of ready to buy. So think about it like this. What if rates didn't go up or go down? They just stayed where they were for the next 3 years, 4 years. What would the demand do?
People are always dying. They're always divorcing. They're always having more diapers. They're always down. They need to downsize. People are going to need to move. And I feel like we've been stuck in the snowstorm, applicable for us in Denver here after this last week. But this snowstorm for almost a year of people saying, I'm just going to stay inside. I'm going to build my bunker. I'm going to hunker down, and we'll use the loft without the door and the whatever else as our guest bedroom or as our office. And people are tired of not having enough space. If you are one of those people, and I'm going to throw out a demographic, if you are a baby boomer and you've been sitting in this house that's 7,000 square feet or whatever it is, you've got 4 bedrooms, 3 baths, and you've been having to clean 3 bathrooms for no reason for this long. I mean, I only have 2, and I'm ready to find some place where I can drive in and drive out and have somebody deliver my groceries and all that sort of stuff. And I've only, I've still got one in high school. So, 2 for the next 2 months, but we have this sort of ceiling right here where people need to upsize or they need to downsize, but crossing that barrier, they're not really doing. And so we're hoping, right? And that's why I ask, because 40% of people that are homeowners in the U.S. don't have a mortgage. And people don't want a mortgage if you spent 30 years paying it off, right? So we need we need a major shift to happen. So
yeah,
that's enough of me talking. So we're going to go on to the next, that last little bit, guys. When you look at your buyer clients that you see, what are their greatest fears?
Well, I think right now, kind of for me across the board is it's just monthly payment, right? I mean, although I will say, interestingly enough, and this is just me, the ones who don't seem to have as much fear about that payment is the first-time home buyer, right? Those younger buyers that have been renting at high amounts anyways, have never had 3% interest rate. I mean, it's guys like us three who have had mortgages in the 3s and 2s that, 6 something sounds scary, right? But for these young kids, they don't really balk at that, right? But yeah, I mean, it's the payment increases for people, I think, at least the ones I'm talking to. It's fear about taxes and insurance and things like that. Where's that going? Do you think rates are going to go down? I mean, we try really hard to make sure people know, hey, listen, here's what I think is going to happen, but you got to be comfortable buying where you're at, because a lot can happen where we cannot guarantee that rates are going to go down. I would never say that to you, right?
Yeah.
So I think that's the biggest thing for kind of the second, third time home buyer is, man, this, the houses are a little more expensive. The rates are a little bit higher, and that's giving them a little bit of sticker shock initially. But I will tell you that, like I said earlier, I'm also finding that people are just tired of waiting, and they know what happens with waiting. I mean, we all have buyers in our lead drawers that we look at. We're like, gosh darn, that person when rates were 3 was waiting for 2. When they were 3, they were waiting for 4. 4, they were waiting for 3. Now you're in the high 6s. So it's just
Well, and there are other things that we're going to cover at a later date that could increase the amount that a buyer pays at closing.
Yeah.
And that's not set in stone. And so we're going to tackle that a little bit later. But just from a personal perspective, I bought my house post-divorce in 2020, and my payment was $1,500 a month. And I think I have a 2.7 rate. But now I'm paying almost $2,100 a month because of taxes and insurance. So that's a very real conversation I have with my buyers, is that, you're not going to have rent increases. The only 2 things that can affect it are taxes and insurance. And, you're protecting your investment. So you just got to look at the equity and weigh that out. So Mike, what sort of fears are you seeing from your clients?
I mean, it's payment is a big thing, but I think Nick touched on it really well, that the first time home buyers they don't have a history or a previous experience to draw from as far as having a previous rate, or a current rate, like your sellers that you're dealing with that are moving up. And so it is a little bit for them more of a kind of transitioning from rent to buying, I think that there are a lot of first time home buyers that are not good with money, younger people typically. But even I talk to people that are like 40 and they've never bought a house. I wouldn't call them, they're young, but they're not young. And unfortunately, a lot of us Americans don't get taught how to manage money or save and budget and different things like that. So it's kind of an interesting thing, So one thing I want to throw out there is that, and I know Nick does this too, really consultative in our approach of preparing people for home ownership, to say, okay, maybe you're not ready today, but in 6 months, here's what you can do to get there,
Yeah.
So it is interesting. I had a guy yesterday that was like, I've got money saved, but I've got it earmarked for my leg sleeve tattoo.
Wow.
Yeah. It's like, okay.
What's the ROI on that?
Yeah.
It's about $4,000 to get one from your mid thigh to your ankle. And it was just interesting, his approach. So I just use that as an example of, this is a gentleman with kids and a wife and wants to get out of an apartment. And
yeah, I've got tattoos, but I'm waiting to get the rest of them until I get my investment property.
Well, yeah, I mean, there's nothing wrong with tattoos. There's nothing wrong with spending money on things that you like or enjoy. And that's the point of it is, I mean, it's a little extreme, but it could have been the same thing as like, I'm spending all my money to go to Italy next summer. Well, maybe
and that's the thing, right? Is
frivolously spending money.
Yeah, right.
Oh, I'm going to time out there. I hate the word frivolous there. I am a millennial, technically. I'm an elder millennial, 1981 baby. And what I will say is, straddling those two generations, X and millennial, the X's were latchkey kids. They sort of were on their own from the start, and they sort of realized that they were going to have to take care of themselves. That's not maybe the same way that the next generation was raised. And I just went to family reunion in Las Vegas, real estate conference with nearly 20,000 agents there. And, the talk was kind of dismissive around the generation of, because they want experiences instead of things. And I applaud that, because life is so short that you can go and do that. However, I see it from the viewpoint of, if I take care of my adulting first, that will help me pay for the experiences later. So, if with the house that I have now, I probably will never sell. I will rent it. It will be passive income. And then I'll get to go and do traveling with that. That's why I'm looking to buy investment properties. That's a whole nother conversation, which maybe we need to talk next time, is about how to secure lending for different types of investment properties. So there you go, guys. I'll throw that out there. And any last parting notes, thoughts? If people have a house right now and they're in it and they're wondering, do I contact the lender? Do I not? I haven't had a mortgage in 5-10 years. It's paid off. I could just sit here and let it go. My perspective is right size, so you enjoy it. You can age in it appropriately and easier, more safer. And with a smaller property, most generally, you're going to have a smaller tax bill. But that's just me.
So I'm going to throw this out there, and maybe this is a topic that we can earmark for later on. But if we're looking at these folks you just mentioned, I would assume they're a little bit older. They're going to transition into kind of, you said aging, and they have a house that's free and clear or darn close to it, tons of equity. The reverse mortgage to purchase that last house with equity, but not have a mortgage payment if they can't pay cash, is a viable option. And it's an interesting one that it's the opposite of what you just talked about. The millennials, that big generation of new home buyers coming up that we all touched on. You've got the baby boomers that are transitioning, that could be something that we could maybe.
Yeah,
that'd be a good one. Yeah,
that definitely, we'll hit on that, because if you're tired of your kids coming home and living in your basement, then get rid of your basement. So
exactly. But do it so you don't have a mortgage payment.
Yeah, right? Exactly.
Living life, memory, instead of things, like don't be tied to your house later in life as far as a mortgage goes.
That's my plan, man. I don't want to be I want that freedom number. I have that freedom number. I want that freedom.
Yeah.
So thank you guys. As always, if you are watching this, thank you so much for watching. Hit that subscribe button. We would really appreciate it. We like to know that people watch our videos and are learning something. All three of us, the reason we work well together is because we are learning and education based. And we have essentially dedicated ourselves to doing that first time home buyer and seller consultation online. And we've done that in the last 3 months. So That's all saved under the live tab on this page if you want to check out those videos. We would appreciate it. All of Mike and Nick's information, as well as mine, is saved below in the comments or in the description. And so if you'd like to reach out to any of us, we would love to answer your questions. You will see us again next week, and let's just commit to it. Let's do reverse mortgages next week.
All right.
Sound good?
So the 26th.
We're not going to put a date on it. We'll talk about that. So.
All right. Sounds good.
All right. Thanks,
All right,
guys.
All right. Thanks, everybody. Thanks, Renee. Thanks, Nick.
Yep, absolutely.